Hey guys, how are you? I want to show you one feature that Interactive Brokers recently added to the TWS platform. It's a cool feature. It's called the Fundamentals Explorer. Now, prior to this, you were able to see fundamentals for ETFs and all that, but never in a way that looks as good as this. So let me show you how to get this window. So whatever stock or ETF you're watching, go to it on your watch list, right click on it and click on this icon, which is the Fundamentals Explorer. Click on that thing and you're going to get this sort of window that appears. So let's wait for it to load. You get a lot of data in regards to whatever the financial instrument is. So you can see here everything related to the ratings, the performance, the holdings, the ratios, the fees, the ownership, everything. Okay, so let's take a look at it. So like, for example, let's say you just wanted to figure out what the holdings of the healthcare sector are, and it will tell you that this ETF XLV is 10% weighted in Johnson & Johnson and it's 7.5% weighted in United Health Group. Okay, so this thing can give you a good idea of what's going on in the assets you're trading. All right, so for example, the tech sector, triple Qs, we're going to go ahead and look at the holdings, and you can see that here we've got 3 companies that take up the majority of it: Microsoft, Apple, Amazon, and then you got Facebook, Google not far behind. And here you have a nice allocation of showing you the industry allocation right here, and of course where it's based in the world. This was interesting. Ownership, go to the ownership and it'll tell you that the tech sector is owned 3% by Goldman Sachs and 3% by BOFA, or Global Research Group. So that's quite interesting here. So you can see who are these guys running the show. Well, you can see that Goldman Sachs owns 3% of the QQQ. That's pretty cool. If we go to the SPY, apparently JP Morgan owns 6.5% of the SPY, followed by BOFA, another 6.5%. So these guys right here are the guys we should be trying to follow because they own the majority of these ETFs. In fact, they manage them. So the guys that manage the ETFs, well, since they own the majority part of the thing, I mean, at any moment, they can essentially do what they want with it. If they need to sell a big bunch or buy a big bunch, they're doing what they need to do in order to keep their portfolios managed. Just for your own knowledge, they're publicly required to disclose their holdings. So it makes sense to know that these guys are the ones running the show. This is quite a useful window, and I guarantee you'll find the information you need regarding the fundamentals of your company. And this is quite interesting down here. So if you go to ownership and you go down to the bottom, trade log, so the institutions are required to disclose their institutional large transactions. As you can see here, March 31st, this is as far as this goes back to here. What I've understood here is that at the end of the month, these transactions come in as being recorded. So probably they took place at any time during the month. They seem to be recorded on the last day of the month. And just for fun, look at all of this stuff here. During March, there was a lot of big purchases from these funds here. You can see this one here, 281 million in SPY. We don't know what day that took place, but we can see the transactions. Again here, 389 million, another one like that. 510 million by Calamos Advisors during the month of March. They bought that. Mackenzie was buying them. Manulife was buying them. Even Pennsylvania public school employees were buying them. Now that looks like a pension fund or something. Bridgewater Associates, they sold almost $1 billion of SPY in March. Pretty crazy stuff here. So basically what this is the institutions here that are required to disclose their transactions. So you can see here Wells Fargo buying 700 million worth of spiders, 400 million by Barclays, TD bought spiders, UBS bought spiders, Morgan Stanley bought spiders. Look at all these purchases in March. There's a lot of buys here. Look at this. Morgan Stanley, 2.3 billion in spiders. Goldman Sachs, 3.2 billion in spiders. BOFA, 7.68 billion in spiders in the month of March, guys. The month of March, the height of the pandemic. These guys were getting long through their teeth during the freaking heat of the pandemic. And what does that tell you? While everybody was looking bearish, these guys were slowly accumulating all the shares. Everybody was panic selling. Who is it going to? It's going to the institutions. Damn right, baby. Hey guys, what's up? So in today's video, I'm going to talk to you a little bit about tape reading and why I chose to switch to the Jigsaw trading platform for tape reading. And yeah, so let's get right into it. So what you're looking at right here is a traditional ticker tape where you can see the transactions printing. So for example, here you're seeing the current price for this instrument, which is the triple Qs ETF. And on this side, it's the NASDAQ futures contract, okay? And over here you can see the bid and the offer. You're not seeing all of the liquidity on the bid and the offer, but you're seeing the best bid and best offer. That's what's important. Now in this ticker tape over here, you're seeing the transactions that are printing. You're seeing at what prices they're printing. You're seeing the size they're printing at. watching this alone should be a good enough general indication of how many buys are taking place and how many sells are taking place. However, the main problem with this, and I'll tell you right now, is that you can't actually see the cumulative amount of contracts or shares trading at each price in a very displayable manner, which can help you make better trading decisions. And that's the reason why I'm using the Jigsaw platform now, because in that platform you can see the cumulative amount of volume taking place at each price and to see where that absorption is taking place. All right. And again, what's the point of trading? The point of trading is not to be right. It's to follow the big traders who are moving these markets and seeing where they're leaving their little footprints, where they're leaving their tracks, and using that info as a guide to make better trading decisions, okay? So that's why reading the tape is important for a day trader or for any kind of short-term trader, and I would even argue for long or mid-term traders as well. So again, watching this tape like this, you can get a good indication of what's taking place. This sort of recording right here, this is the sort of tape that I was looking at near the end of April. And with this tape, you can simply see where the contracts are taking place on the bid or on the offer. You can't necessarily see how much is printing at each price and how aggressively, because sometimes this stuff happens really quickly. So I was looking at these tapes all the way until June, until I finally realized that I needed a better tape. So if we go to yesterday's action, now look at this tape here. I want you to see one thing, okay? What really matters is this right here. This is the footprint. It's showing you how much volume took place at each price. And over here as well, how much volume took place at each price. The current trades are taking place. And the reason why this right here is such a better way to read tape is because you don't have to sit there reading these transactions coming through at what price and saying, okay, someone's absorbing at 76, or there's a lot that just printed at 76 and we're having trouble trading above that. And you can pick up things like that on the tape, obviously, but with something like this, 10 times easier, because you can actually see the amount of transactions taking place at each price. And again, I don't need to say this, so you can just see right there, in 2 seconds I was watching this, you saw that 200 print on the bid right there. You saw that, didn't you? You saw this 385 right there. See, if I was watching the tape, I would not have known that 350 went through on this bid and 380 went through on that offer, right? I would not have seen that on a regular tape. I would have seen that on this tape right here. It tells me, and look at this right here. As soon as the market opened, we had a block order on the Qs, 100,000 shares at 9:30 a.m. That's the price they traded at. All right, these things, you will not be able to see them with a regular ticker tape. You need to be able to see the current trades in the market, which is this. And second of all, you need to be able to see the block orders coming through. You need to filter out block orders. Like in this case, that's a block order. Over here, I don't know why. I wasn't at the screen at this point, but generally this window should be in front so I can see those block orders coming through. But you can see here, there was a block order as soon as the market opened for 103 contracts on the NASDAQ at 72. And see, I would not have seen that if it wasn't for this technology right here. This is why if you're going to be reading tape to make short-term trading decisions, that this is going to be probably the best way to do it. So I don't think I need to go further on that. I will probably make more videos on tape reading in the future, but basically, I'll explain to you the basic concepts of tape reading. The market movers are smart. They're being very strategic with their areas, right? And if some big buyer, some big sellers coming in, they're not going to buy or sell all in one shot. But sometimes what they'll do is they'll throw a big order out there just to hit the market to see what it does to the market, right? So that's why you need to understand how the market is reacting when these big orders hit the market. You see? So we had that 72 sell at 103 contracts at 72.25. But again, that was as soon as the market opened. It was a block sell. We pushed up towards the 80s, failed around there, and now we're trading lower at this point into the 50s. It doesn't necessarily mean that because we had a big block order, we're trading lower. That's why it's important to see how the market reacts to those block orders. Like I said before, sometimes you'll get a big player that'll come in and hit the market with a block order and it'll get the market moving, right? And then you'll see it start moving on retail. Like right now, there's no block orders coming in here. A lot of it's on retail. Retail is selling this thing. And that's why, look at this, no sell block orders, no big players are selling this market right here. Now, what do you think is going to happen? We traded down to the 45s. And again, I don't know what I was doing going into my Discord at this point. But again, look at that. We're seeing buys. A 16 buy at 50. And you can see if we look on the right here, look at this. The Qs are starting to trade higher. We went from the 20s all the way up to the 30s, up to the 40s. And again, lack of block sell orders at that point showed us that the price was likely going down on retail. And what happened? Look, we traded all the way back to 60. So around these 40s, like I just finished saying, there was no big block sellers coming in to push this thing lower than that. We had the big sell, and then we started seeing block buys. And what happened? We pushed way back up to these 60s. Retail is getting trapped. This is a general concept here. Okay, is that the market movers are not going to be showing their size all at once. Obviously not. They're going to throw out a couple of orders, get the market moving, get the retail excited, and then once the retail is excited, then they're going to start moving the market in a way to grab that retail money, you know? And again, it's not institutions versus retail. It's institutions versus institutions, and the retail is kind of mixed up and meddled into all of this, okay? And again, that's why this sort of tape is so important, right? Because with your regular broker's tape, where you can just see the prices, the time, and the amount of shares, you're not going to be able to see the transactions at each price and filter out for block trades. And you know, there are some software that offer this, but for me, this Jigsaw tool has been a savior, and I'm going to keep using it because all it does, it's nothing revolutionary, but what it is, it's a tool that provides you a readable way to view this information. Anyhow, guys, so that's gonna be my tape reading video for today. I'm gonna make more videos on it in the future. If you're interested in this stuff, I suggest you check out videos from the YouTuber Fat Cat, and also watch the Jigsaw trading videos on their YouTube channel. They do some good explanations as well. So guys, I'm gonna wish you a great day for today. I'm gonna wish you a great Saturday. Enjoy the rest of your day and take care. Bye.